Hi guys, my name is Pawan and welcome to my YouTube channel buildingyourdreams.com. So today in this accounts, our main important concept which we'll be discussing today is basically about liquidity ratio. So now it's very important to note down that this liquidity ratio is basically divided into two parts. First one is current ratio and then it's liquid ratio. So this liquidity ratio is basically divided into two parts. First one is current ratio and liquid ratio. So now in this liquid ratio is basically further divided into two parts, or we can say that its liquid ratio is also basically called as quick ratio or acid test ratio. So now first we studied liquidity ratio is basically divided into two parts, current ratio and liquid ratio. This liquid ratio is also called as quick ratio or acid test ratio. So now let's go a little more depth. What is the meaning of this quick ratio? Quick ratio is nothing but it expresses the relationship between quick on liquid asset and current liability, which can be converted into cash quickly. Example gold. I can give you an example. Basically why I've been mentioned is about the important concept of gold is that as soon as you sell gold you get the money very immediately, right? So this is one of the example for quick ratio. Even the bonds, even when you go to post office and you can purchase a small amount of bond which can create a huge amount of impact as a profit for you in the later dates. The gold is one of the aspect where as soon as you sell you get the present amount which is required in the market price, right? The present value of the gold which is there in the market price, that particular type of amount will be getting it directly without any further delay. Within 1 hour itself you'll get all the amount quickly, right? So this is one of the example for quick ratio. So now next one is quick assets. They include all current assets except inventory, stock and prepaid expenses. So basically what is this quick assets? The quick assets, as you all know, that they include all the current assets. They'll include all the current assets. Example, it can be cash in hand, cash at bank, debtors, bills receivable. So all these are the current assets, right? They include all, but except in this quick assets, we will be not adding the inventories. Inventories are nothing but their other names for the inventories are called as stock. Stock is also another name for stock, is nothing but inventories. So they include all current assets except inventories and the prepaid expenses. So this is basically about the quick assets. So in this concept we understood that what is this quick ratio? It is basically the relationship between the quick on liquid assets and the current liability. I gave you a best example about which can be converted into cash very quickly, right? Which I gave you a very easy example of gold. And similar way in the quick assets, as I mentioned, they include all current assets except what do they not include? Except other than inventories and prepaid expenses. As being said that in the quick assets, the formula is quick assets divided by current liability. So quick assets is equal to quick assets by current liability. This is the formula. This is a very important formula. Okay, so based on this, further explanation of this, I can give you an easy form of understanding through a problem. So this is basically to calculate an acid test ratio. Before teaching about acid test ratio, now let's go on through one more formula, that's about quick ratio. Quick ratio is nothing but quick assets is to current liabilities. So this is the simple concept about it. So now first we discussed about liquidity ratio. Liquidity ratio further divided into current ratio and liquid ratio. And liquid ratio is also called as quick ratio or acid test ratio. And then this quick ratio, we understood that it is basically the relationship between the quick on liquid asset and current liability, which is basically converted into cash very quickly. I gave an example of gold. Then further we discussed about what is quick assets. It includes all current assets except the inventories and prepaid expenses. And then in quick assets we came to a formula. It's like quick assets by current liability. Then we came to other formula, it's other important formula, that is quick ratio is equal to quick assets is equal to current liabilities. So now moving on to the sum. This sum is very easy. It's basically about calculation of acid test ratio. So now we are supposed to calculate the acid test ratio as we studied before. So now the question is cash in hand rupees 5,000, cash at bank rupees 15,000, debtors 20,000, bills receivable 10,000, stock is nothing but inventories 30,000, prepaid insurance that is also 2000. Advance salary, it's 8000. And interest accrued, it's 3000. Marketable securities is 40,000. And advance for purchase of machinery is 50,000, and fixed deposit in bank is 25,000. So now in this you're supposed to calculate the asset test ratio. So now first we are supposed to classify them whether they are current assets or they are current liabilities. So now in this sum mostly I've given you all the examples which is basically related to current assets, so you can get a little more clear picture of it. So now we're supposed to classify which is current assets and current liabilities. Or if there are anything further than that, for example, if it is fixed asset, how are we supposed to classify? I'll be just explaining you detailedly. So first one is about cash in hand. So cash in hand, as you all know that it is a current assets. The current assets, we are just placing it as CA, just write it CA, current assets. Cash at bank, you know that it is a current asset, right? CA. Debtors, yes, it is a current asset 20,000. Bills receivable, current assets 10,000. If it's bills payable, verbally right, it's basically the current liability, but now it's given away current assets. Why? Because it is bills receivable, that is 10,000. And stock is nothing but inventories, that is a current asset, but we will not conclude it. I mean, like, we will not take this value. Why? Basically because as we studied in the quick assets, they include all current assets except the inventories and prepaid expenses. That means that we will not take inventories and the prepaid expenses. Similarly, in this question, the inventories which is given over here, it's a current asset, but we will not take this 30,000. So next one is prepaid insurance. We will also not take prepaid. Why? Because as we discussed about the definition, about the current assets, we will be not taking inventories and prepaid expenses. And advance salary. So now it's very important to know that advance salary, the other name for advance is nothing but prepaid expenses. Yeah, advance, whenever the name concept comes, it's very important for you to note down that it is basically the prepaid advance salary. So the advance salary is nothing but it's also known as prepaid expenses. Kindly note down this. So now 8,000, we will be not noting down, will be not taking down this value. Why? Basically because this is a prepaid expenses. Now interest accrued. Interest accrued is a current asset, that is 3,000. We'll be taking it. Marketable securities, it's a current asset, it's 40,000. We'll be taking down this value. Advance for purchase of machinery. See, advance for the purchase of machinery. As you know that this machinery is nothing but it is not a current asset, it's not a current liability. What is it? It is mainly a fixed asset. Right, you have studied in fixed assets, it's basically there is tangible, intangible. Similar way, in fixed asset is advance for purchase of machinery, which is basically a fixed asset. So now what are we supposed to calculate over here? We are supposed to calculate the asset test ratio. That is nothing but we're supposed to calculate the current assets. So in this time, we will not calculate the fixed asset. That means that we will remove, that means we will not take down this value 50,000, we will be not taking down. Next one is fixed deposit in bank, that is current assets, that is 25,000. The fixed deposit in bank, which is given over 25,000, the other name for fixed deposit in bank is cash at bank. So this is also a current asset. We'll be taking all this value. So now if you add on all the current assets value, that is 5,000 plus 15,000 plus 20,000 plus 10,000, we'll be not taking this three values. Why? Because this is inventories, this is prepaid. Similar way, this is also an advance, it's prepaid. And remaining current assets, interest accrued 3,000, marketable securities 40,000, and fixed deposit in bank, it is going to be 1,18,000. So that's all for today's class. So now we got a clear picture about what is liquidity ratio, and then we discussed about liquidation debt, that is quick ratio and asset test ratio. We discussed two formulas about quick assets and quick ratio. Then we did a sum based on the calculation of asset test ratio. So guys, that's it for today's class. Hope to see you in my next video with further interesting topics in accounts. Hope to see you. Bye. Goodbye.